Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Friday. Hope everyone is doing well. Let's kick off this morning's Charts and Coffee with a quick look at the economic calendar. It's been a busy one this week, not necessarily because Powell was on it, but because we got that CPI data. And data, gang, data is not about, what was the CPI number? Not really. And even today's preliminary University of Michigan's consumer sentiment number, that's not really about what that number is either. Everything tracks back to one place. And yes, it might make a pit stop off in the bond market or in, obviously the indices, but everything we're looking at, here we go, has to do with where are we going to end up in May, right? What is the probability for the target rate peak? And for the most part, it looks like we're going to be peaking uh, in March, right? That's looking like so the peak of that terminal rate looks like it'll be reached with the March 22nd meeting. And you can see that's where nearly 80% probability will be at that 475 to 5. We hold for the most part for May, although the 5 to 5.25, maybe one more rate hike is kind of looming for May. We move out to June, and you'll see here that everything kind of simmers down. That June is definitely that hold. So still we're looking at a 475 to 5% target rate probability. Okay, so that stayed steady through CPI. If not, even a little bit less hawkish in that we're going to reach the target rate probability of 475 to 5 is a little bit lower than what was expected. And then we go out to November, right? Now that's the next, that's two-part question. When do we start to cut? We know how to measure the cut once we know what the highest peak terminal rate target probability is most likely. Because anything that's a quarter point below that, 25 basis points below that, becomes the first cut. And you can see that comes into focus, if not largely probable. It's possible it starts to come into focus, gang, November of this year. Now, these are Fed fund futures contracts. This is basically a futures contract whose sole reason for being is to allow traders to express their opinion, to speculate on where rates will be based on a meeting by meeting contract. So just like we would speculate on the S&P or gold or crude, we can do the same thing about where Powell and company are going to take rates. Okay. And that's what we look at. By the way, that's what everybody on television is citing. They're looking at the same data and they're extrapolating from that. And I want you to be able to do the same thing on your own without having to listen to the talking heads and whatever their opinion may be. You can make that decision by being able to make decisions on what you see, right? That's what I definitely do for myself. And that's how I'm measuring macro, gang. That is the only macro that matters. All right. It's the only one. And even if you're wondering, but what about the R word, Rog? Recession. We need at least 2 GDP results, 6 months, 9 months to make sure we're still in a recession, where most of the time we're coming out of the recession. And by then, gang, what's happening? We're probably looking at the Federal Reserve cutting rates maybe anywhere from 2 to 3 months off in the distance. So that's where I'm just not concerned about the way in which, and believe me, they know this too, right? I'm not being clever here. I think it's pretty well planned out. Got to give them maybe a little bit of credit. They're very good at stitching up wounds they make. That's their job. So let's get to it. All right. So first up, let's get to the first question here. All right, let's see. Alex, how are you? Happy New Year. Yes. I don't know what the cutoff for Happy New Year is, but I don't know. I think all of January we should celebrate the new year. Happy New Year. Thanks for another year of CNC. We're coming up into our third year. We're coming. Can you believe that? Unbelievable. Anything you saw that made me play the buy the dip versus sell the rip on the CPI trade yesterday? Oh, right. So yes, we had I write everything down. 39.85 to 39.59 zone HPMR, right? We did a number of things. Now my glasses are dirty. Hang on. We did a session in the Sector Secrets Mastery where we analyzed and traded it live. And the whole idea was first get directional bias, gang. That's structure. Directional bias is part of that whole what is the structure of the market conversation. And then the next part is, well, if I have bullish bias, which we did, the market structure was bullish going into that 830 hot zone. We knew it was buy only. We focused on the hourly price movement range. We let time and historical volatility give us the range. And the cool thing about time and historical volatility is, quite frankly, it's invisible to everybody else. Nobody else can see this because, well, nobody else has this. This meaning the ability to look back, plot on the chart what a 6-month look back on historical volatility would plot by way of support and resistance. And that's it. That's it. Hindsight shows either side would have worked. I go with what I call first come, first serve, Alex. First come, first serve, meaning whichever zone it hits first, that's the one that I take. So that's why we took the long side. And it ended up being a great trade. And not only for CPI, but with a break even, it had some decent follow through. All right. Next up is there we go. Steven, CLF. Do I have any thoughts on CLF? It's in an uptrend. It's in an uptrend. Buy the dip is what I would do. I'm not gonna look when something makes a significant new high like this. It's not going to end up on my radar for a buy. I don't buy new highs. I just don't hate my money that much, right? So I love that you're looking at an uptrend. That's great. AGI, that's a much nicer uptrend. If I'm going to compare uptrends, Stephen, I like the AGI. It's more steady. It's giving us some nice, very nice. Let me grab my drawing tool here. It's giving us some very nice reversion to the mean, as you can see right here. Beautiful and much steadier, more established uptrend. And lastly, Mondelez. We like Mondelez because we like XLP and a little bit shakier and uptrend. So I would say if you want to focus on something a little bit more conservative, like the Darvis or the middle line of the wave zone. But yes, it's buy for sure. Yeah, definitely the long side of Mondelez. All right, next up, am I still anchored to 2022? Pedro, yes, I have not moved my volume weighted average price or my V score anchor. It's okay, gang. We're going to make that decision sometime this month, but no, I have not moved them yet. Thank you for the question. Great question. All right, next up, Prince asks, what is the pre-market window for trading? I prefer starting at 7. So what's my pre-market window? Meaning, where am I looking for potential entries on the futures contracts that I might look at if I'm properly caffeinated in the morning? That would be, 7 to 9. I'll even stretch that to 9:30. But the start point would be 7 a.m. Eastern. You got it. You got it. Hey there, David, coffee dominator. Sometimes it dominates me. Do your daily price movement ranges, DPMRs, work best in neutral markets or also in trends? Structure dictates strategy. Absolutely, David. I'm grateful for you as well, my friend. Thanks for your time and thanks for your question. Do they work best in neutral markets? So let's put it another way. Let's see here. The best way to use, so let's just call it what it is. It's support and resistance, right? We're just deriving it in a fairly unique way. And so in trends, let's say it's an uptrend, we're going to be focused on the support levels. That's it, right? Because we have directional bias. We're not looking to short. We would look at support. And in neutral markets, we're open to either end of the hourly or, in your case of the daily price movement range question, I'm open to either end of it. So for example, and I did a video on this, gang, yesterday with gold. So if you're wondering, okay, Rod, can I have a little bit more background on what this is and how you'd use it? Head on over to the Simpler Trading YouTube channel and you'll see right here, I have a video called 2 Ways of Playing the Trend in Gold. And that's just about daily price movement ranges, the daily time frame, and the 1 hour. Then we talked about the 4 hour time frame as well, with a preference to the upside. So it works in either trends or non-trends because its job is to find support and resistance. But once we know there's a trend, we also know one side of the trade, long or short, is eliminated from contention. So thanks for the question. All right, next up is Lisa. Good morning. Let's see here. How do I, or do I, look at the 19.8? All right, we're getting pretty specific here. All right, let's take a look. 19.8 VIX level. Are you talking about the low? I'm not sure where 19.8, I guess you're talking about yesterday's low. Lisa, how do I, or do I look at the 19.8? Structure dictates strategy. So that means that right now the VIX is trying to get quite bearish again. And on the flip side, you can see the Darvis support zone. That's where those purple lines are coming from. Those purple dotted lines, those are lines that I've drawn that extend forward Darvis levels that I've plotted previously. Um, how would I look at that? I mean, it's a low. So I guess the simple answer is no. But in that area, we know that we have a support area of previous support based on the Darvis pattern and the Darvis boxes. But be careful. On one hand, it's trying to get bearish, but on the other, it's so freshly bearish, this oversold stochastic could be very telling here at around 20. All right, next up, any plans for a weekly price movement range? Oh gosh, Francisco, I'm just getting the daily out. I appreciate the question. So anytime Bot and I release an indicator, we test it for months and months. By the time DPMR becomes available, it will be into its 10th month of testing with the data. And that doesn't even count the fact that I've been using this process for 10 years. So if we were, it would have to go through that same rigor of the data, how we're crunching the data, and ultimately, are we happy with the way that it's plotting on the chart once we turn it into an indicator for Thinkorswim and for TradingView. So it's a process. Don't know. Yeah, don't know if that's something we're going to do, but I wouldn't be surprised. But it's really up to it's really up to the data to tell me that weeklies would be something we want to watch. Could that be interesting on a daily? I agree. Price movement ranges are magical, right? It's something that we have exclusively here at Simpler. And Lorna Bot saying WPMRs. I know we're neck deep, eyeball deep in the DPMR. So so let us get that one out, and then we'll definitely see what's around the bend. I appreciate that. I think it does. What I love about your question, Francisco, is everything we do with the indicators that I put out, and I say we because this is definitely myself, Trish, and Lorna. Everything we do, the three of us kind of put our heads together. Lorna Bot makes sure that we are not, releasing some test version to you all. We have absolutely stress tested the indicator before it goes public. Trish, she says, "Hey, this is how it works within the system that we have created." So you'll notice that HPMR and DPMR work with the top system. The top system works with the V score. Everything has to plug in together to make this unified picture. And so everything gets put through that process. So when you've got everything that we teach you, it all should work together. It never should be disparate or, oh, it's a whole new thing. Never. It's always, how do we understand time, price, volatility, volume? It's always going to come back to those four things. So I appreciate the question. All right. Do I set ranges around the price alerts? Do I set ranges around the price alert? Mr. Walker, I'm not quite sure I know what you're asking. Do I set range? I set price alerts around my ranges. That I do. Yeah, that I do. All right. Eva asks, where to get the sector slow stow indicator? Where to get these indicators for toss? So Eva, usually what we do when Trish puts my class packages together, she thinks about what you all will need to be able to deploy what I teach the best. The slow stow and the multi-trend, Eva, is actually really an integral part of and an improvement to something I've been doing for 30 years, and that is the top system So along with the grab, the wave, propulsion, and Darvis, we have multi-trend and we have that sector slow stow. So on February 15, if you haven't jot that down, everybody, we're going to be talking about that on February 15. And then again on March 1, I believe, my next class talking about that particular topic and including those indicators with the class, Eva, is on March 4. So if you can wait, use the free versions that I give you now. But if you can wait, you're going to get a heck of a deal. And I like to let you all know when there's a particularly good deal coming up because you get the indicators with the class. And that's about as good a deal as I ever can extend. So there you go, Eva. All right. Thoughts on financials this morning? Sure. All right. So JRB asked demand and support levels. Yeah, very curious. That I've been hearing a lot of that wording lately, demand and support. Gang, it's support and resistance. Call it a ham sandwich and a peanut butter jelly sandwich, but it's all support and resistance. That's it, right? So think of it this way. A floor is support. Support is buyers. Buyers are demand, right? A ceiling, right? Ceiling is resistance. Resistance are sellers. Sellers are supply. That's it, right? So I've been hearing this lingo a lot, gang. It's just support and resistance. So how do we find support and resistance this morning on XLF? Well, JRB, it depends on the time frame we're looking at. Right now, we're inheriting a bit of a downtrend as we take a look at the action on the intraday XLF about 14 minutes before the bell. Overall, on the daily time frame, we're trying to get overbought, and it's going to be an interesting battle here. We've got the VWAP here. We've got a pair of Darvis up that way, and a slow stow. The slow stow is actually right up in that high area, that 80 level on the 21K 3D slow stochastic. So if I'm looking for resistance, that's going to be pretty much what we're entering around 35.80. We have a Darvis level at 36. We have another Darvis level at 36 and a half. All right. And so that's where the resistance is. So if you want to call that, and we're closer to the resistance, right? And I love that you said demand and support. Love it. So that's where the resistance is. That's what we're closest to right now, JRB. I love the way you phrased the question for those of you that may not be familiar with the lingo, right? All right. What about support? That's way down here, JRB. So the soonest I could think about any kind of historical volatility based support, or as you mentioned, demand would be closer to 35.30. And then if I'm looking at the quality of the trend, right? If I'm looking at the wave, I'm not going to get the wave kicking in until I get to about the lower end of the daily price movement range. That's going to be closer to about 35, 34, 85, that area. So I would love a pullback. The problem is we're not in a trend. So let's take your question, JRB, one step further. Is there a trend in financials, right? Is there something that's trending in financials? And if I recall, we probably need to take a look at it again, but Schwab would be a great symbol to trade if you're looking at support, demand. Oh, take a look. JP Morgan organized into an uptrend. So I would keep an eye on Schwab because I do know Schwab has been in a more consistent uptrend than some of the other names. So if we're looking at financials and focusing on demand / support, take a look at Schwab and tell me what you think, friend. I think you're going to like that one a lot because it's a little bit more established in terms of wanting to focus on a long from a zone like that. All right. Next up, does the drop this morning in RTX? RTX has had a couple of interesting days. Does the drop this morning in RTX change the bullish thesis? As long as RTX is trading above essentially 97.80 to about 97.30, as long as we're above that level, no. I mean, it could be a lot of volatility, but it doesn't change my idea that the path of least resistance is still to the upside. It could change the zones that we're looking at, right? It could definitely change the zones that we're looking at, but it won't change my thought that I want to still be long, right? Maybe if we go neutral, which I don't believe we have, although we'll have to see where we are around 10 a.m. this morning. I'll tell you what, if we get down to 96.30, I'd still be a buyer. And as long as we're clinging to the wave, I'd still be a buyer. Yeah, absolutely. Absolutely. Thanks, Stacy. Hit that like button before you leave. Yeah, we're wrapping up here. I appreciate that. Prince asks, um, so as far as RTX, no, I'm still bullish. I'm still bullish. I'm still bullish. A lot of volatility. So we kind of take a Dramamine and look to the long side, right? So if Prince asks, would I be able to use the DPMR to limit target for intraday? I don't know. That would be my first inclination, Prince. But if we start pushing, let's say an intraday trade starts pushing the parameters of the sessions range, it might be one of the levels to look at, but it would not be an initial profit target. It might be a third profit target. It might be one of the more mature profit targets if the trend continues. So the simple answer is yes, but the a little bit more in-depth answer is only if the trend is persisted and we have a reason for a second or third target as we are looking at a session, right? A session, the daily range. So it could be, sure. I mean, it's not out of the question. To your point, Phil asks, any chance copper? Oh, a copper bot? Do we have copper on the hourly price movement range? I don't believe that we do. Any chance? I mean, we have it on Freeport McMoran. And the reason we do is a lot of the traders that use HPMRs are mostly options traders and stock traders. We do have futures traders that use it, obviously. Yeah, it could be added. Yeah, we'll take a look at it. We'll take a look at it. Yeah, heads up for the next premium update, Phil. We'll run the numbers and see what we think about them. Yeah, sure, sure. All right. Yeah, we'll take a look. All right, gang, and just like that, I am out of time. In fact, I've run over. So, gang, thanks as always. Caught, I do not trade those ultras and 3Xs and 2Xs. But remember, as long as you're looking at the S&P futures, you can absolutely take that wherever you'd like, whether that be the quadruple Qs and different inverse or 3Xs. I don't personally, right? But I don't. Yeah, but I don't. Bob C, the comments, yeah. So Bob, I'm actually dual broadcasting at the Simpler Trading YouTube channel, also in the free trading room. Well, actually, I'm triple broadcasting. I'm also broadcasting to my personal YouTube channel at Raghee Horner. All right, so yeah, and I try to read the questions out so everybody knows what we're talking about. I appreciate the questions this morning, gang. I appreciate you all. Thank you for tuning in. Thank you for being a part of the Caffeinate and Dominate crew. I will see you all on Sunday. Yes, I will have a Raghee report this Sunday, 6 p.m. Eastern at the YouTube channel. Be good to each other, gang. Until then.